Hello, traders and investors. Steve Gans here. And as I prepare many of my videos that I share with people, I'm often doing some technical analysis. I'm going in and I'm drawing trend lines and I'm drawing support and resistance lines. And I've gotten questions about how is it you do that? So there are books written on this. There are entire sessions of study that can be done on this. So I'm just going to touch very superficially on it. And a couple things that are really important is it is essentially psychology. And what I mean by that is it's a lot of people looking at the same data and then responding to that in similar ways. Again, to highlight that, if I look at this trend of Apple that took place during 2023, I had drawn this trend line very early on in the year. I had drawn this trend line back when I had just these 3 points where Apple had come down, hit a certain area, and just the two doesn't really mean a great deal to me. But when you start getting a third that adheres to a trend line, that becomes a little more meaningful. The other thing is this is a daily bar chart. So a daily bar chart is probably the most common chart that people are going to look at. That, unless you're a day trader, that's the most common chart that people are going to look at. Once I connected those three dots and I extended this out, we can see that for the bulk of the year, Apple adhered to that trend line. And again, the reason is psychology. Lots of other people started drawing a very similar trend line, maybe on their charts. And then when Apple would pull back to that point, people realized, or this trend line might hold. Therefore, it's a time for me to consider buying when you get these pullbacks along the way. Every one of these pullbacks, get a bounce, a little higher, get a bounce, a little higher. Now, in many cases, you can also, if you want to create a channel, you can create a channel by basically just creating a copy of that trend line. And you can even do something like this. So this can help also define when and where Apple might be getting overextended in some cases. And again, the reason this largely works is because lots of people are seeing it, and they're all seeing it in a daily chart. So if somebody were to look at a 15-minute chart or a 30-minute chart, there's very few people that are looking at those for their investing purposes. They may look at it from a day trading purpose. But because there's a lot fewer people that are looking at those 15-minute, 30-minute charts, personally, I believe they have a lot less validity. I think the trend lines are a lot less likely to hold. I think the more people that see something, the more people that act on the same thing, the more valid they're going to be. When you end up with a trend like this, again, this thing ran, when it finally broke, you can see it broke with some conviction there. So Apple really fell off. It dropped out of any form of what I would call real trend at that point. It did start chopping in a very broad range, but no real discernible, what I would call long-term trend in place here. Then, as time started to play out, we did start to get maybe what you can identify as a little bit more of a trend. Now, if I were to come in here right now, and again, this is like, what is they call that? The psychology test, the Rorschach test or whatever, where you come in and you draw points and see what connects the most. And it might be something along these lines. Your goal is to try to figure out what is everybody else seeing? What are other traders seeing and looking at? So that might be somewhat of a reasonable trend line. I'm not going to say there's a very strong one here right now, but that would be one that I might see. But what I do see, probably more important than that, is I do see what I would probably call some support resistance areas. So I might look at, if I hold my shift key here, that will make that line horizontal. And then I might look at somewhere right around in here being a general support and resistance line. It was resistance here, popped through here, then we fell back down, it became support. And when we're talking about these things also, we're talking about the fact that these are general ranges. They're not necessarily very specific dollar amounts. Like at 220, exactly. It's going to bounce. Tends to be a general range in there. So that's what happened. We came down there, bounced, and then we came back to it. Then we fell down through it. But then we did rally back, got above it. And again, this general area here, this 218, 219, has been a support area since then. So right now, I would have that drawn in here as a potential area for future support. Does that mean it's always going to hold? Of course it doesn't mean that. But it gives us a little bit maybe of an edge. Maybe it gives us a 5% or a 10% edge when we're evaluating a trade. Other things that chartists will tend to look at, they'll also look at big moving averages. This happens to be the 200-day moving average. If Apple were to break down, and it would break down below the 200-day moving average, below what many people might consider to be a support area or demand area, if it falls below that, it could fall a little harder and a little faster in my mind. So let's just pull up another one, and I haven't pre-done any of these. I'm just trying to find things that are going to have a lot of volume, that are going to be watched by a lot of people. Yeah, I think Microsoft here is probably a pretty good example. Okay, so using my mind's eye here, looking at Microsoft, I can generally see that there is a little bit of a gradual uptrend here maybe. So in this case, I might come in and take a look at something along these lines as being a potential trend line or support line. If not, that's one way of looking at this. Another way of looking at this might be more of support and resistance. In other words, maybe a little more of a flat horizontal line here. And in this case, I might look at something along these lines, maybe having a line in there. And oftentimes it's not a line, it's a zone. In many cases, I'll draw a big box there, and that box represents a range that I might be watching or looking at. But overall, I can see here right now, just looking at Microsoft, Microsoft is largely trading in what I would call a general range. I might draw that range something around there, something along those lines. So I just would expect for right now, until something changes, we get a breakout above, breakout below. Microsoft seems to be chopping sideways in that range. As an options trader specifically, if I want to own some more Microsoft, when it comes down here, I might consider selling some puts on it. When it gets up here, I might consider selling some calls on it. So just some thoughts, just some ways that traders will look at these things and maybe play them. Google, let's take a look at Google. So Google, the most obvious thing that I see right here very quickly is just, again, a general trending line here. I could maybe draw it. Hello, cat. Trader cat just wandered by, checking out, making sure I'm doing things right. So something along these lines as maybe an uptrend. And I can also see here, I could probably create a second line here, and that would be my long-term channel. Long-term channel might be something, something like that. Again, we're hitting the top of that channel. So right now, in my case, I saw this earlier today, and I went ahead and I sold some calls against shares of Google that I owned, essentially doing covered calls on them with the expectation that might pull back a little bit from that high area. So another way just to, again, use these channels, draw in some trend lines, and it's just all about what the eye sees and what you think other people are seeing, because at the end of the day, that's really what matters, is how other people are viewing this and how other people might react to it. If I look at Meta here, from my perspective, while it does certainly have a trending, I'd maybe do something along these lines as a general uptrending line. It does have a definite trend going to it. The other thing I see right offhand is it has traded in a couple different ranges over time. And let me see where my box tool is here. Meta was trading sideways in this range for some period of time. Then when it finally popped up and out of that range, It then started trading sideways in yet what I would call maybe another range area that is similar in size. That's not uncommon. These things go in waves. And so it'll be waves of one size, and then those waves stay the same size, but it breaks out a little bit. And now it's up into yet another wave. So I might even take that same box and put it up on top here and say, okay, that could very well be now this third wave, if you will, in Meta. So it's just about looking at, again, what other people are seeing, how the market reacts when these things get to certain points, like this pullback point here to the bottom of this range, bottom of the range, bottom of the range, and then top of the range, top of the range. Now, I don't know it's the top of the range here, of course, but if it's the same size as this one, I can see that it's likely that might be where that wave is going to stop. And then it stopped a second time. So this kind of confirms to me that, okay, this may be the top of that range. And then it stalled here a little bit for a day or two, and then ultimately ended up popping through. And note that it popped through before earnings. But many times earnings or a news event will drive the price to one of these zones. Of course, sometimes, depending on the earnings and news, it could blow right through it. But more often than not, it will speed up the underlying stock's movement to a given area, to a given zone. So hopefully that helps give you just a little idea as to how people do this. Again, the biggest thing in my mind is to recognize that what you're doing is you're trying to judge the psychology of the average person out there that might be looking to, more often than not, invest in this, not so much trading, because the vast majority of these are held by hedge funds, institutions, etc. Somebody in there day trading a Google or day trading a Meta isn't going to make a difference on this. It's all about the big institutions when they're stepping in, etc. If you find this content to be valuable, give me a thumbs up, give me a subscribe if you will. And of course, feel free to leave me any comments as well. Thanks so much, everyone. Take care.